All right. We are. Good morning, my futures family. Welcome to the market prep for Wednesday, May the 31st. Our focus is always on accurate context, good risk management, and patience. My name is John Hoagland. Thanks for trusting me with your time. Sorry, I was a little bit tardy this morning. Still working out some of the kinks with the new switching platform, but we are here. Funny, I don't feel tardy, but this morning and in trading today, we've got lots of information due out. Over and above all of that is, of course, the debt ceiling negotiations and how that's going, but lots of other shiny objects to focus on this morning for our trading. Starting with the mortgage applications and rate. Mortgage applications were lower, 3.7%, not as bad as last week, which was minus 4.6%. Mortgage rates lower than last week, just by a little bit, 6.69 this week, or 6.91 last week. 750, we've got a couple of talking Feds coming at you. Collins and Bowman, 8:45 Chicago PMI, 9 o'clock job opens, labor turnover survey, 11:20 Collins speaks again, 11:30 Harker speaks, 12:30 Jefferson speaks, and then at 1 o'clock we know we have the beige book, which means we are 2 weeks from the next FOMC meeting. As far as what we're seeing in the markets here this morning, we've got the equities, U.S. stock index futures set to open steady to lower. Investors hawking that debt ceiling progress, and apparently some weak manufacturing index from China also being blamed for the lower opening that we're expecting. That weak data out of China, I should say, is also credited to the downside continuation in crude oil. Down, what is it now? Over 3% lower already here before the open. So we're seeing some continuation lower in crude oil. That doesn't bother me at all. Hopefully it'll help us out at the pump too. The U.S. dollar is higher this morning, taking the euro to a 3-month low. Dollar is higher against all 10 of the foreign currencies that it is weighed against. The dollar, the VIX, I should say, is up about 3%, 1802, about a point higher than it was yesterday at this time. The dollar index again higher, back above 104 at 104.44. It was 103.98 yesterday at this time. And the yield on the 10-year down to 3.65%. It was 3.72 yesterday at this time. So as always, I'm going to ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. And good morning to all of you. Futures trading today, good morning. George, good morning. And Lacey says good morning to everybody as well. Good morning. The rooster crowing early this morning. Futures trading today, however, won the prize this morning. FVB, good morning. Guten Morgen. Sean, good morning. Matthew Fulham. Get the volume and open interest info from. I've got the link here for you. This is where I get it from. It's the CME website. We'll probably, if you're in group coaching today at 12:30, we'll take a look at that and kind of look at how I collect and store that information, Matthew. That might be helpful for you. Scott saw and he conquered in a live account, if not already, coming soon. Congratulations again, Scott. Timothy Marks, Pete, good afternoon, good morning, good evening. Julian, good morning. Will, good morning. Theo, good to see you. Travis, Charles, Nasdaq, Bill, George, Duque, good morning. My brother Tom is with us. Good to see you, buddy. Love you and miss you. Vince, good morning. Jason, I got lost here somewhere. Yeah, gremlins in the house, right? Yeah, no, they're just trying to work out some of the kind of learnings when we're using new tools here. Good morning, Jason, Sarah Hall. Good morning, prayers and love to you, Robert. Good morning, Chad, John, Rusty Golfer, my spirit animals with us here this morning. Jason, Rooster, wonder why my crow this morning didn't wake up. Yeah, we did have a little bit of a gremlin, but we're good now. Tim, Andy, Tom, Alejandro, good to see you. Haggle Matters, Trader Fabe, morning. Andy Bleed, Joe, gratefulness. Another great word from Joe this morning. Grateful, be grateful, patient, and humble in your trading, right? Let's make some money, man. Yes, absolutely. John, sounds like the intro to Ladies Man. And some Courvoisier. Thank you, Robert. Yeah, this is one of our new branded t-shirts. Yes, quoting Van Halen this morning. You're right. You're right. Yeah, I don't feel tardy. Anderson, Alejandro, Subconscious, good morning. Anderson, finally funded after 10 years of trading and 6 months at Top Step. Never give up. Nice job, Anderson. Very, very happy to hear that. We're looking forward to seeing your continued success, my friend. Let us know how things go. Brody, Lacey gets more doggy treats. Yes, yep, she gets lots of doggy treats. And again, congratulations, Anderson, everybody. Congratulating you on your success in the trading combine. Just dance with the one you brung. Dance with the one you brung. Again, we're looking forward to your success. All right. So what do we have going on here in these equities? What do we have? Let's take a look at these charts. Here's the daily in the S&Ps. So yesterday on a pullback day, we added open interest. We added 33,000 in open interest. Now, the equities are coming into rollover. I don't think that that's necessarily a function of rollover here just yet. I think we brought in some naysayers. I think we drew in some new shorts in this market yesterday with that increase in open interest. Volume was actually pretty good. It's suspiciously looking like a bull flag, but a bull flag would have narrow ranges and reducing open interest. So there's a little bit of a difference in that. I'm not viewing this as a bull flag until it proves me wrong, right? On the 30-minute, however, it does not necessarily look much like a bull flag. It looks more like range bound up here. And then we are holding some overnight inventory to the short side. We are opening below this trend line, which does have several points of contact on it. Let me make this bigger. So starting here, we've got contact, we've got contact, we've got contact, we've got contact. So this trend line is actually relatively sturdy and opening below it, and with the gap and with overnight inventory to the short side after putting in a recent high in the overnight session. Remember, Anissa, that's not something that's good to the downside, but we're opening in an area where that would bode for at least the opportunity for some repair. We have this move up here on Friday, and then we take a look at that in the profiles, and we'll see if it looks all that confident. So this is a bit of a concern for upside continuation, is the fact that we're going to open below this trend line. We could see this market come back to it, test it, and then break. So I'm going to be careful. I mean, the market is opening with a gap, which may indicate the need for earlier activity to get into the best trade location for the day. Take a look at the 30-minute chart here. Yeah, that's not it. This is it. We were looking at the 30-minute chart. My bad. Let's look at the TPO chart. All right. I need more coffee. So yesterday, we have an excess high. The initial balance is the high of the regular trading hour session. It's a normal variation, neutral day. Look at where the overnight high is, basically at the point of control from yesterday. We're going to be opening with the gap. We're going to be opening in an area that is boding for possibly some repair. The market didn't spend a lot of time here. This is an excess low. If we start taking out too much of this excess low, I would be looking for this market to perhaps rotate all the way down to the point of control from Thursday, which isn't necessarily very prominent, but it's still hanging out there. And there's a couple of anomalies in the area down there. So this is the composite profile. We've started to kind of build some volume up here, and we're kind of up against a low volume node here. It's a little bit concerning for continuation to the downside. Here's the TPO chart, including the overnight. So here's an overnight high. Here's an overnight recent high. Market doesn't like to leave those for very long, but just trading what we're seeing today, is this starting to look like a bull flag? It's possibly, but again, with yesterday's increase in open interest, I think that's much less likely. And looking back at the 30-minute chart here, we've got lower lows. We're starting to put in lower highs. So I'm going to be kind of focused on gap rules this morning. Again, gap rules. If we open outside of the previous regular trading hour days range, we're looking at, if we can't close that gap relatively early or find acceptance inside the previous day's range, we're looking for opportunities for continuation to the downside. This all looks like it is boding for repair. We got naked point of control. We've got weekly kickoff low below that, which is another naked point of control. Be watching the Delta, I think, again today. Delta has been a little wonky, but it's been indicative of longer time frame traders at times. Let's take a look at crude oil, which just opened up. All right, so yesterday's breakout below weekly kickoff low is a market state change, right? We were range bound. We're outside of that. We brought in good volume, and we added an approximately 21,000 in open interest yesterday. That's new business in a new direction. We're seeing continuation here today. That volume and open interest increase, it's too early to gauge a trend coming from this, but it's encouraging for continuation, and we're seeing it already today. Perhaps a little bit of fundamental information in that, but technically this is a pretty decent breakout to the downside. A couple of caveats to that. We've got nothing recently except excess kind of down below where our low is now. That's a little bit concerning. Our swing low here is, what is this, 63.90 is this swing low. That's a pretty decent trade if it's going to target that. Here's the 30-minute chart. So we have the breakdown below the weekly kickoff low. Value and time showing acceptance of lower pricing. We've got a gap to the downside, a rather substantial gap to the downside. It's going to be it's going to take a lot of energy to close this gap. It's going to complicate things to try and get into a move to the downside. This overnight inventory, if they don't see what they're looking for really early in the session today, if they get nervous, they could bring price back to levels that would be more comfortable to look for shorts than right at the low here. Do I want to buy it here? If I can limit the risk, it's something I might think of to take advantage of my direct competitors, the other short time frame P shooters out there that are all holding shorts, looking for this market to continue lower. Well, what's it going to take? It's going to take new business. It's going to take longer time frame sellers to push this market lower. They did yesterday with that increase in open interest. Are they going to continue today, or are they going to let the overnight inventory adjust to give them better trade locations if they're thinking about selling even more? So this is kind of critical down here. We'll check this. We may check this during Make Hogue Money today just to see how this day played out. Because if I'm looking for shorts and I know that my direct competitors are already short, many of them in the hole, I might try and stay patient, look for a pullback towards yesterday's range, look for the market to set up some structure for a short so I can limit my risk and maybe catch the move to the downside. We do have the API today at 3:30 and the EIA tomorrow because of the holiday. Usually that would be on Wednesday, so we got to keep an eye on that. Where did the charts go? Ah, there they are. Here's the TPO chart. A lot of excess on the high yesterday. We did leave a gap. I mean, there's naked points that control a go around and above this price, this market. Okay, yesterday excess high, IB extreme high, normal variation extreme day, and we're seeing another gap lower and a continuation. It's gonna be a tough trading day today, I think, for you crude oil traders. You got to stay patient. Now for the Nasdaq. All right, so Nasdaq's been painting a different picture than the S&Ps. Of course, we all know that the AI stocks have been flying high. We're starting to see a pullback. We've got an excess high yesterday on the daily chart. Well, what does that mean? We did add 7,800 in open interest yesterday on the way down. This may be a warning shot for longs, but again, we have to remember that we do have overnight recent highs as the highs. Market tends not to like that. Look at all the space down below if we do grow some legs to the downside. Remember, anything can happen. Anything can happen. You know, this is all just putting context over the market. We're trying to set up hypotheses as to what we think might happen, and then we trade to those hypotheses with the proper strategies, and we hope for the best. If we're right half the time for twice what we're twice what we're risking as profit, we're going to do okay. But nobody knows, and especially with the uncertainties right now, if something goes haywire, if they pass it, if they don't pass it, who's going to be happy, who's going to be unhappy? It is just protecting yourself, taking calculated risks. Taking calculated risks is the name of the game, right? We got to limit our risk, look for opportunities where our profit is potentially greater than our risk, and we have to act. It's all in the execution, right? Well, Nasdaq, is this a warning shot for longs? Very well might be. Take a look at the 30. So there's that recent high in the overnight session. It's still hanging out there. Market's not going to like that, but we are holding up better, I think, than the S&Ps. S&Ps traded down to the value low from Friday yesterday. Nasdaq hasn't even come anywhere near that. Are we going to open with a gap or aren't we? Overnight inventory is a little bit short. So if we open with this little gap and we can't close that, I'll look for some potential repair to the downside. Here's the TPO chart. This one includes the overnight session. I wanted to put that up there because there you can see that recent overnight high. Normal variation, excess high, acceptance lower. We open with that gap and we can't close it. Then we look into potential repair all the way down to this point of control here. But who knows what's going to happen? I mean, it all depends on the debt ceiling. Dun, dun, dun. All right, we put in an excess low yesterday. We lost 3,300 in open interest. This was more of a short covering move yesterday than a new business, but now we're in a new area here. We've got 1, 2, 3, 4, 5 points of contact on this trend line. We are now above that trend line. Things may be changing. The dollar being as strong as it is going to be a caveat to that, right? This trend line, again, it's a real pretty solid. It's got 5 touch points. Gold needs new buyers if it is going to continue. If not, it could just fall into balance or pull back to the low end of that balance. It's at risk of continuation to the upside. Watch the dollar. What are we doing here? Overnight inventory flat. Looks like, we were going to be opening relatively close to range and, in range, close to value. Overnight high looks very interesting. There's a naked point of control up there. We could check that. We could come back. If we do find legs to the upside, find structure, short time frame structure to go with it. But keep an eye on the dollar and always protect yourself. If you can't find a cheap way in, you may be better off just staying out. I love cheap trades. Some of the best trades I've ever made were made simply because they were cheap trades. What about the TPO chart? What do we find here? We've left kind of a weak low down here. Okay. On the daily, it looks like we left excess below that. Excess on the low. IB, neither the high nor the low of the regular trading hour session. Normal variation. I would call this a neutral day. We've got potential for repair above the market. Remember, when there's holes and anomalies left in a profile, market tends to go back to those levels, but we've got work to do before we're going to be able to get there. Here's the euro. Euro is it's like a piece of chicken. Well, I don't want to say chicken rooster. Let's say a piece of rice between 2 chopsticks here. Overnight low is the weekly kickoff low. Overnight high is this trend line. The dollar is a little bit higher, so what it's keeping us. I mean, it's taken the euro on its low from the overnight back to levels we haven't seen since middle of March. Yesterday, no change in open interest. I mean, we lost 100 contracts. That is absolutely inert. The market is waiting for something. So this trend line and the weekly kickoff low are the only levels today that I would be looking for any opportunities, because it's the best way to limit risk. The trend line's already been rejected. Weekly kickoff low already rejected. We're going to trade range-bound strategy, selling against the high, buying against the low until it's proven wrong. Upon acceptance outside of this, we go with it. Doesn't look like that much of that's going to be going on today unless something changes. And as we know, anything can happen. Take a look at the 30. Overnight inventory pretty short, up against an important inflection level. Already you can almost hear all those overnight shorts going, oh, we better get out. We better get out. We better get out. We better get out. They're already working on reconciling that. So if I'm looking for shorts, I'm not going to be getting short here. I'm going to be looking up against that trend line, which is right up here somewhere. And there, if the overnight inventory is short enough, it could bring us there. Or I'm going to be looking for opportunities down here at weekly kickoff low, because those are the only levels that I see that I can limit risk. Take a look at the TPO chart. Normal variation, weak low, weak low. Here we are. We're below those weak lows, up against weekly kickoff low. Gotta be looking at those extremes for your best trade locations in the euro today. What about the 10-year? We lost 9,200 in open interest yesterday, more a function of rollover than anything else. Maybe again some profit taking, short covering in that. Is this kind of creating a bear flag? Very well could be. Volume is hard to read because of rollover. Open interest also hard to read because of rollover. Pretty decent range here yesterday, though. I wouldn't be looking at that for a bear flag. But look at this. I mean, this is higher highs, higher lows, Volume, again, hard to read. We lost open interest yesterday, but that could be a function of rollover. Overnight inventory is long. It's already reconciling. It's taking us right to the middle of this channel. Where are my best trade locations if I get the opportunity in the 10-year today? At these extremes. At these extremes. What about the TPO chart? What's that going to tell us? Excess low, excess low, excess low, weak high, excess above that. We've got some weaker structure up here. We've got a gap here. Lots of points of control to look at on both sides of the market. We've opened with a gap. If we can't close the gap, I'll look for opportunities to look for longs. It's hard to say that, rates might continue to leak lower, but that's the fact. And we got to trade what we see, right? As long as I can find an area or a level with which to limit my risk, I'm okay with taking it. Chad, you took the opening range trade in the in crude oil, huh? Nice. What about the? All right. Well, things have changed here in the natural gas since I first sat down and looked at this. We had some pretty decent open interest come in yesterday on pretty good volume to the downside on a breakout below an important inflection level. Well, we're seeing signs of rejection of that. Well, what did we do last time we were down here? We rejected. We are now rejecting those lower prices. Okay, here's the 30-minute chart. Look at that pullback yesterday. You think that was a little foreboding or a little foretelling here? Boy, this is a big move here before the open. Now we're seeing continuation. We're back above weekly kickoff low. If that comes into play, that's an opportunity to limit risk. Where are we looking for this market to go? Let's look at the TPO chart for this. I mean, there's oodles of weak structure above, naked points of control, prominent points of control. I'm hoping if I'm going to be trading the natural gas to get an opportunity on a pullback to limit risk. So apparently the opening range trade worked well in crude oil. Let's take a quick look at that. I love it when a plan comes together, right? So it looks like it was the low of the session. Pretty decent move though. Already $1.30. Oh my goodness. That is quite the trade. Quite the trade. All right. Well, I'm looking forward to seeing everybody for the group coaching session today at 12:30. I'm going to put the link in for that group coaching. I've got some pretty good emailed in questions, but questions on the fly are always suggested, encouraged, and appreciated. And I hope that I know the answers. Nobody knows everything. I certainly do not. But we'll look forward to having a good session and learning something together. Take your deep breath. Stay humble, grateful, creative, and centered in your trading today. If you're not centered, you're not going to make anything beautiful. Get out there and profit today. Trade well, and I will see you again at 12:30 for group coaching, or make Hogue Money at 2 o'clock after that. Get out there, trade well. Don't forget, say a prayer for peace. Get out there and have a great trading day.